Good morning, ladies and gentlemen, and welcome to the RBG Holdings PLC post-AGM investor Q&A session. Throughout this session, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and we will notify you by email when they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit that following poll, and if you would be so kind as to give that your attention, we would be most grateful. And I'd now like to hand over to Nicola Forstern, CEO of RBG Holdings. Good morning.
Good morning, and welcome to this, our post-AGM Q&A. I'm sorry that the AGM couldn't be held in person this year, and I very much hope this will be the last year that we will have to do this. I would like to introduce my board to you today. I'm joined at the head of the table by Keith Hamill, our chairman, by Robert, who is known to most of you, my CFO, by Marianne Ishmael, our non-executive director, and by John Lovett, my company secretary. So I'll now hand back to Mark, who hopefully will be able to compare your questions as they come in. Please feel free to ask about anything to do with the company.
Nicola, thank you very, very much indeed. And just to remind investors, it's just as simple as the Q&A tab, typing in your question in the box at the bottom of the screen and pressing send. Nicola, thank you very much for handing back. We did receive a couple of questions ahead of the event, and perhaps I could read out the first, which reads as follows. How do you see your expansion plans, organically, or is it mainly through M&A?
We've always said that we see expansion being done both organically and through M&A. We have organically always said that we want to look at increasing the numbers of teams or fee earners that we have within the group. And then, of course, we do look at specific M&A that fits the very strict criteria that we have in terms of being high margin, cash driven, commercially focused and entrepreneurial businesses.
That's great. Thank you very much. The second question, I think somewhat related, obviously, to the first is if it is through the M&A route, how do you envisage funding?
Robert?
Yeah. So we are a profitable business, cash generative business, but we will look at all funding options depending on the demand of the potential acquisition.
Thank you very much. And I guess the last question is how do you find integrating new acquisitions? What is the process, the kind of outcomes that you like to achieve?
So we're passionate about integration. It's very easy to get on an M&A course and to be focused on, acquiring and delivering an acquisition and the benefits that you can see visibly in the short time that follows that. However, the real journey on M&A is how you integrate and how you really reap out the benefits of proper integration. And so to that end, we did bring in a specialist integration director for the Memory Crystal acquisition because this is the largest acquisition that we've done. And our focus on that is to ensure that we not only do the obvious things, the physical integration, the back office integration, the saving of duplicated costs on contracts or on staff, but that we also do the really important work of integrating the cultures of those businesses. In our business here and in RBL, we have a very commercially focused entrepreneurial way of doing business. As I have said many times in my presentations, in the legal sector, you are generally dealing with a much softer, non-commercial culture, and that is definitely true of Memory Crystal. And it is necessary to have a much more sophisticated and holistic approach to how you integrate those cultures. And so we have a dedicated team that do that. And we do want to do that in fairly short order. I think that one of the things that I've learned from previous acquisitions, previous companies that I've run, is that people like certainty. So you want to set out your stall, how you're going to run the business, and integrate that and deliver that in a fairly reasonable period of time.
That's great. Thank you very much, Nicola. We've got our first question coming now through the platform. It's from Alan C. So thank you, Alan, for your question. It reads as follows. You were hoping that Project Neptune will be decided by the end of June. Do you have any update on that?
Yes, that's a very good point. We were in an appeal on that, and we have had a judgment handed down, but that's currently still embargoed. So we're not able to release details of that. And we hope to be able to confirm what the outcome of that is in H2.
Thank you. A question from David B. Thank you, David. How do you intend to expand the billing rates for Memory Crystal in view of their different rate and in view of their different areas of focus?
So in terms of the companies, we do have, we may be different in terms of we're a contentious focused business with an RBL, but we do have similar departments to those of Memory Crystal. So we have been on a similar journey to the one that we're about to embark on with Memory Crystal when I took over Rosenblatt. And one of the key ways in which you change the way the pricing works is you need to train the partnership around how they scope and fee fix. And traditionally in law firms now, unfortunately, clients have led the way they price because we got bored of having limitless bills and limitless fees, and we capped them by introducing fees. So the industry never introduced fixed fees or commoditized pricing, the client did. And so what we need to do is to train the partners around how you deliver a better pricing structure within what the client now expects. And that training was very successful in Rosenblatt, and we've already set dates for introducing it across the Memory Crystal partnership in the late summer and early autumn of this year.
Thank you. Just now moving on to a question from Paul P. Thank you, Paul. Could you give an update on convex deals and a view on Ebitda margin given new staff remuneration?
I'm going to give this to Robert to answer. I know the part of it, but I'd like you to do it. It's around margin.
So, should we just do around the margin bit, or do you want to do convex as well?
We in terms of the deal, yes, I can answer the deals, but obviously we publicise when the deals are done by way of issuing a reach or an RNS, and obviously there is a transaction that goes through because the team are remunerated by commission payments in shares. As there has been no announcements to the market, then there is no more news on deals, and we will obviously see what their results are, which are as published at the half year. On how the impact on our margin has been.
Yeah, I think this is a general thing on margin, roughly around the acquisition of Memory Crystal as well. So obviously, RBL is a very high margin business with a strong percentage of our contentious business, with 70% contentious. So the Ebitda margin on our RBL is significantly higher than on Memory Crystal. So there will be a levelling down of that margin, but we've got strong targets of how we want to drive the margin on Memory Crystal. It's fair to say because of their mix of their business, I can't see them achieving quite the margins that we deliver in RBL, but we will see, or we believe we see a route for them to increase the margin they're on. So there will be an element of a dilution, but we see that increasing over time as we drive into the business.
So Robert, I had actually, sorry, Mark, can you put that question back up? You're taking it away a bit quickly, but I had read that question as being about Convex's staff remuneration and not about new staff being their new remuneration package.
Sorry.
Gave it to you.
Yeah.
Sorry, Nicola, the question read, just to be clear, could you give an update on convex deals and a view on margin, Ebitda margin, given the new staff remuneration?
Yes, it's related to Convex.
Right, okay, so just for this year with Convex, obviously there is a reduction in their margin due to the commission arrangement that we've done that replaced the earn-out. So the margin, so generally I think Convex will deliver 45-50% Ebitda margins. It will be roughly down to, I would say, 35%
Yes.
in the business for this year. So there was a specific one-off event. They missed their deferred earn-out through no fault of their own, really through the COVID, but obviously they come back this year. So yeah, that arrangement will drive down the margin for this year, and then we'll go back to more of the norms in next year as we follow through.
Yeah, thanks, Robert.
Yeah.
Thank you. Next question is from Bob M. Thank you, Bob. How confident are you that you can find additional professionals of the right culture and ethos that you will need to expand your teams and grow the business at double-digit per annum?
As I've always said, there's a sort of self-fulfilling prophecy in the way that we work. Because we're quite commercial and quite entrepreneurial, we tend only to attract those partners and heavyweight fee earners that are going to thrive in that kind of environment. So if you're a professional that really just wants to do a 9-to-5 role, have a nice lifestyle and go home and watch the tennis, you're not going to be attracted to our kind of organisation. We don't want you. So we want people who want to get on, who are very entrepreneurial, who want to grow their practice size, who also want the funding behind that to help them do that. So whether it be in Memory Crystal wanting to push into the cannabis space, whether it be our litigation teams who want to push into CFA and DBA investments. So we tend to find that our culture and ethos is sort of helping us to recruit the right kind of person. And at the same time, the Memory Crystal acquisition has enabled to really seal our position, particularly in the London market. I mean, the London market, in terms of our contentious and dispute department, we're now the largest, department in London. So that is really sort of sealing our position in terms of being able to attract the right kind of person. And we've turned a corner in that respect, I would say.
Thank you. The next question is from David B. Thank you, David. It's been anticipated that COVID-19 will generate heightened levels of dispute litigation. Is this now becoming more apparent?
Not yet. The government still underwrites quite a lot of areas of business, whether that be through the furlough scheme, whether it be through as announced yesterday, they've deferred the point at which landlords can throw out tenants for non-payment of rent. So there are various areas that are still protected by the government or have not yet basically come to fruition. Dispute and litigation tends to follow some period of time after the dispute first arose. So we aren't seeing, other than through, I have to say, property, there is property dispute that we're asked to advise on, but it hasn't yet crystallised into litigation. But it is inevitable. And I think our internal view of it is that we're looking at a bow wave that probably hits in late 2022.
That's great. We are coming up to the final question that we currently have in this live meeting. So to any attendees on the call that are considering questions, it would probably be appropriate to submit them at this point. So if I may, Nicola, the final question from Alan C. So thank you, Alan. I respect that there is good opportunity to move MC, Memory Crystal, towards some of the margin ratios we already achieve. Are there any areas where Memory Crystal have strengths that we can learn from and implement?
I'm going to share this question as our last one anyway with Robert in a minute, but I think the one for me is that they have built a very collegiate, fairly successful partnership where they have no one rainmaker or billing partner that is dominating the partnership. And that was obviously different from Rosenblatt. And there is a lot to learn from the way they've done that, and the way they've built those practice areas, and the way that has been created. I wouldn't say managed, but created. And I think we're very respectful of that and very keen to retain that culture. What would you say? Because you've obviously done, and Robert's much more hands-on with the integration director so far. I'm still waiting for some of the outputs of some of their meetings, but what have you seen that you would feel?
Look, I think there's always an opportunity for us to learn. They've driven very strongly into corporate. I'd say they are stronger than us within the corporate sector and very active. And I've got quite a strong brand. Real estate as well. They've got a strong real estate brand. So those opportunities, and even within their DR team, look, we're similar. They've got quite a strong DR, dispute resolution team, 30% of their business. So there's always opportunity for us to learn across the businesses. Yeah.
I think actually the other thing that is we liked a lot as part of the acquisition, and Robert's just touched on, is brand positioning. And they have got a very strong brand, and they have they've invested a lot in that brand, and they haven't diluted it by doing mergers or partner deals. So they have a sort of 30-year brand there that's become very synonymous with a good standard value product, and particularly in the corporate transactional field. And they are probably one of the lead transactional teams for the mid-market capital markets work. They certainly lead against us, against Rosenblatt, and I say us still. But they certainly lead in that area.
Thank you. Another question that has just come in from David B. Thank you, David. Memory Crystal, still early days, but when do you think that will be fully integrated?
That's very difficult for me to say with any degree of certainty. I think the initial first phases of integration that are the, as I used to call it, the low-hanging fruit, the easy wins, will be done certainly by the end of Q3. When in terms of being able to fully integrate the front of house, which is where the culture comes in and where we have to tread somewhat more softly, I would think we're certainly looking at early part of next year. But I don't want to put a finite date on that, because as with any integration, you bump into technical issues, and one of the big ones for this business is around its platforms and its IT, because obviously everybody works on practice software and we are on different systems. So that needs to be borne in mind. But if I certainly, as I've always said, if I had a choice, we'd be fully integrated by the end of this year. But I think that's ambitious for the second phase to be completed by the end of this year, and I think it will be early in 2022. And I'm not looking at Robert deliberately when I say this, because he's probably got eyes heavenward.
I think it's interesting to add with this acquisition that there's not a huge amount of overlap at the front end. We are very complementary, and it's always good to remember that Rosenblatt or RBL was 70% contentious, 30% other, and then Memory Crystal will almost the direct opposite. So as an acquisition, and when we're looking at the front end, the important part of the business, there is, we're not acquiring two full service law firms. We're almost acquired a direct fit for ourselves as a complete business. So I think that's always a good point to remember. It's not as if we need to manage departments through that, but yeah, as acquisitions that we've looked at a lot of law firms, this would be the best acquisition fit that we found. Yeah,
we couldn't have done, frankly, in terms of, and Robert's made a much better point than I did actually, and that fit, we couldn't have chosen a better target and for that, to be honest. And so what you won't see is you haven't got here a mass redundancy program. You just won't have that, because it's very much fitting together, and we're looking to expand. So that makes it easier in terms of the integration.
Thank you very much indeed. We have another question, or a couple of questions that are coming through. So thank you to Paul P, whose question reads as follows: what growth rate should we expect on core RBL legal services revenue over the next couple of years? And the second follow-on is, are there any significant opportunities or risks associated to this?
That's a difficult one. Do you have a handle on?
No, I think
right now.
You can't make a forecast into the market. There's a broker's note out there that shows the growth trajectory of the business. Slightly confusing this year as we've done the acquisition. So I think numbers are out there of how or where we want, or where the broker perceives the business will grow. Opportunities and risks then.
Risks, I mean, as I've said before, when I've been asked about risk, it's just about the timetable of the integration. I won't really see there are any other risks. There are potentially some, risks as you do get with any acquisition of people being uncomfortable and wanting to leave, staff risk. Again, we're working hard to minimise that by involving an integration director and by being very hands-on and being very, very alive and aware of and sympathetic to the cultural integration. Opportunities are massive. So I think that we're already trying to capitalise on that. We've done quite a lot of work between Memory Crystal and Convex. We're already acting for 2 clients on Convex, literally within 4 weeks of the exchange that happened. So I think there's lots of opportunities, as I say, because they're complementary businesses. We often find that the needs of one fit the other, and we're able to cross-refer. And we've already entered into, with currently 2 law firms, we already have a collaboration agreement in place between the 2 law firms that means they can cross-refer and manage business between the 2 businesses.
Thank you very much indeed. And I think we're coming up to the final couple of questions from Emmanuel D. They both really around the working from home and the impact from the pandemic. The question reads as follows: any colour you can provide on the London lawyer churn as part of the work from home trend? Is this an opportunity of a threat? And how are you dealing with the work from home?
Morning, Emmanuel. The difficulty with the position we're now currently in is that when we went into the pandemic, the message and the law was very clear: work from home. And now we're getting into a position where it's the legislation will get lifted now in July and not in June. And now we're into a kind of are we working from home? Are we not? There's no legal requirement to stay at home. We have to manage this quite sensitively. We would like to be able, if we can, to capitalise on both the investments we've made in home working in capital terms, but also in training staff and in getting used to the way in which we work from home to enable us to maintain our property footprint as we grow. That would make sense, but how we do that and logistically how that work needs some thought. But at the same time, we strongly believe as a people business that people benefit from working together in teams. We believe in management. We believe in leadership. That's much easier to do in person than it is to do as we're doing today on the screen. For those of you who have met me will know it's not nicer to do it in person meeting than it is to do it via this medium. I don't have much view on lawyer churn yet, mainly because we're not seeing a return to the office. And I think that's going to be interesting to see what happens, because we have seen people move, and there's been quite a lot of physical movement of staff, as we've seen in the leisure sector, that people may have been on furlough, may have been taking their money and then actually have disappeared somewhere else during that period and actually haven't reappeared for work. I think with, even in our market, we're seeing that people have moved and changed their personal circumstances. And I'm sure we'll see some people wanting to structure their working week where they're partly working from home and partly working in the office, which we are supportive of broadly if it meets the needs of the business and if it maintains our productivity. But what we have seen, which surprised me, is still quite a lot of movement of team during that period. So we did recruit, we did see people take on new opportunities. And given lawyers are very conservative, that did surprise me a bit. And so we have had new joiners who have only met people remotely, which is quite an unusual situation to be in. But I think that's inevitable when people embrace this kind of remote working culture. But in terms of, I do see it more as an opportunity than a threat. I don't see any risk around this personally.
Nicola, thank you very, very much indeed. That takes care of all the questions that have been submitted by attendees today. Perhaps, Nicola, ahead of me redirecting investors to enable them just to provide you with their general views and expectations of the company. There is just one question that I think you've just seen, haven't you? Work from home will be a source of litigation, potentially in sensitive sectors like financial services, such as M&A and trading. I think perhaps you might have covered most of that in your previous response.
Yes, I think I have.
Yeah, thank you. So look, before I redirect investors and attendees to provide you with feedback, perhaps I could just hand back to you, Nicola, just for a few closing comments, and then I will redirect investors.
Okay, me again. I just want to thank everybody and say that I'm looking forward to doing these in person when I can. Mark might not be, because then we were doing on this platform, but I do look forward to seeing you again in person. Thank you.
That's great. Thank you very much indeed to the management team from RBG Holdings. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that management can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of RBG Holdings PLC, I would like to thank you very much for attending today's update. That concludes today's session, and good afternoon to you all.